Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 7th, 2024, and we're diving into Rockwell Automation's latest earnings report. Joining us is John, our Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Rockwell Automation, a leader in industrial automation and digital transformation, has just released its fourth quarter and full year 2024 results, along with guidance for fiscal 2025. There's a lot to unpack, so let's get started.
Revenue and profitability overview. Let's start with the top line. Rockwell Automation reported fourth quarter sales of $2.036 billion, a 21% decrease year over year. John, what are the key factors behind this decline?
The decline in sales is primarily due to lower sales volume across their segments, particularly in software and control, which saw a 39% drop. The overall economic environment and specific market softness have impacted their revenue streams significantly.
Despite the sales drop, the company reported a diluted EPS of 2.09 cents for the quarter, down 20%. How does this compare to their full-year performance?
For the full year, Rockwell's sales were $8.264 billion, down 9%, with an adjusted EPS of 9.71 cents, a 20% decrease. The full-year figures reflect similar challenges, with lower sales volume and a decrease in segment operating margins being the main contributors.
Operational efficiencies and future outlook. John, despite the challenges, Rockwell Automation's pre-tax margin improved to 13.5% in Q4. What drove this improvement?
The improvement in pre-tax margin was largely due to the absence of last year's Sensia goodwill impairment and effective cost reduction actions. Additionally, the Lifecycle Services segment showed strong performance with a 10% growth, driven by digital services and margin expansion.
Looking ahead, Rockwell has provided guidance for fiscal 2025. What are the key highlights?
For fiscal 2025, Rockwell expects sales growth between -4% to 2% and adjusted EPS in the range of 8.60 to 9.80 cents. The company is focusing on high-growth areas and margin expansion projects to navigate the uncertain macroeconomic environment.
Segment performance and strategic initiatives. Let's delve into the segment performance. How did Rockwell's different segments fare in the fourth quarter?
The Intelligent Devices segment saw a 19% decline in sales, while Software and Control experienced a significant 39% drop. However, Lifecycle Services was a bright spot with a 3% increase in sales, highlighting its resilience and strategic importance.
Annual recurring revenue is a critical metric for Rockwell. How did it perform this year?
ARR grew by an impressive 16% year over year, reflecting Rockwell's successful push into recurring revenue streams, particularly through digital services and solutions.
Financial health and shareholder returns. Turning to financial health, Rockwell's free cash flow for fiscal 2024 was $639 million, a 47% decrease. What factors contributed to this decline?
The decrease in free cash flow was primarily due to lower pre-tax income and higher compensation and tax payments. Despite this, Rockwell maintained a robust cash position with $471 million in cash and equivalents.
How has Rockwell been returning value to shareholders?
Rockwell repurchased $594 million worth of shares in fiscal 2024, demonstrating their commitment to returning capital to shareholders. Additionally, their return on invested capital was 15.2%, indicating efficient use of capital despite the challenging year.
Key takeaways. In summary, Rockwell Automation faced a challenging fiscal 2024 with declines in sales and earnings. However, their strategic focus on digital services and recurring revenue streams has shown promise, as evidenced by the 16% ARR growth. Looking ahead, their guidance for fiscal 2025 suggests cautious optimism.
Indeed, while the macroeconomic environment remains uncertain, Rockwell's strategic initiatives and strong market position, particularly in North America, provide a solid foundation for future growth. Investors should watch how these strategies unfold in the coming quarters.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Rockwell Automation's performance in the comments below. Until next time.